Hey traders, Raghee here, and in this recap video we're going to talk about how this is the week. Once again, every quarter we have earnings, and there's certain weeks that are much more impactful than others. One of the things that I've encouraged the Simpler Futures members to do is utilize a tool like Estimize to program in all the heavily weighted names in the three major index futures that we trade. So it's really as simple as going to, say, a site like ETF DB and grabbing the holdings for QQQ. Notice where Google lands at 4.25%, and then grabbing the holdings also for the SPY and the DIA, and programming them, typing them in to the Estimize. So one, you have a really simple way of knowing when they're coming out, and also get a good idea. You know, this kind of information is historical revenue and historical EPS. Gives you a pretty good idea of what I'm going to be dealing with in terms of the kind of numbers that we're likely to see and the type of reaction to the earnings that we're likely to see. And, you know, at the end of the day, this is, again, the week of the tail wagging the dog. So once you understand the impact on the individual futures contract and the weighting, then you can look to see if there's a shock wave setup. Now, the shock wave class is something we did 2 years ago, I think. And I think it was 2 years ago. It was April, I think 2 years ago. April, 2 years, or is it 3? Anyway, it was a class that it's still available. And it was a class that allowed you to understand. I think we actually included in the members area. Now that I think about it, I'll have to double check on that. But I think it's actually included for members. So anytime we have a major economic event, like earnings, like non-farm payroll, like a central bank, there are expected moves that we're looking at, price movement ranges, and in options it would be the expected move. You know, all those are going to be factored into whether or not there's a shock wave. That's the actual volatility increase. What's triggering it? So it's got to be a scheduled event. And then what can I do with it? Now, Google really wasn't at a level that I could do much with. Not really. I mean, I'm not at the edge of an overbought or oversold. It's not at a correction. It's not within the context of an uptrend. And you can see what it's done subsequently. It spiked all the way up to 1120, and then so far has retreated back to 1084. Now, here's the challenge. If you're looking at trades going into the close and Google's an earnings release that's coming in after the close, you're going to have to factor in the same amount of high impact into the close, which is going to guide you to certain expected price movement ranges and certain time frames. So here's where, if you're looking at the last hour of the day, you can look at a 5, 3, 5, 15-minute time frame and play that into the close, knowing that after 4 p.m. and when we get the Google announcement, we could see that giant, that shock wave that impact S&P and NQ. Now, it's going to impact the NQ a little bit more based upon the weighting. Fewer stocks, higher weighting. ES is going to be in play too, but more stocks, therefore a slightly lesser weighting. But you'll notice it's still a high impact, high ranking name, just not as high ranking as on the NASDAQ. So we know the NASDAQ is going to bear a bigger brunt of this. But we also know then expected price movement ranges should step out to something much, much higher for the NQ, like the 34 to 49 point move. That's what we should absolutely minimally be expecting, probably closer to 49. That's the upper end of the price movement range. And therefore, if and when we have an exhaustive 49-point move with the Google earnings, that's the shock wave. And this, in this case, it sets up a short. All right. And that's the kind of shock wave trading. And I'll double check in the members area because I think this is something we did decide to put in the members area not too long ago. The shockwave class, I'll double check. And it allows you to better navigate and capitalize on these volatility events, these scheduled volatility events. During this time of year, Again, utilize Estimize, program in those high impact weighted names, and then understand the way in which they can affect the index futures and the sectors, and even then the ETFs that you play. So tail wagging the dog season. I'll see you in the next update.